So now without further delay, let's begin today's event, sponsored by Genpact and hosted by American Banker. It's my pleasure to introduce your moderator for today, and that is Michael Sisk. Mike, you have the floor.
Thanks very much, Greg, and I would like to welcome the audience once again. We are very grateful that you've chosen to share some of your busy day with us. We know that your time is valuable, and we will honor that today with what I'm confident will be an enlightening 60 minutes or so of discussion. Once again, our topic today is the art and science of customer experience in commercial banking. And my name is Mike Sisk. I'm a contributing editor at American Banker, and I'll be your moderator today. I've been in the business about 20 years, and my articles have also appeared in Barron's, Crane's New York Business, Inc., Institutional Investor, Strategy and Business, and Worth. And I am very, very pleased to introduce our two speakers today. The first, Anu Sakdeva, is SVP and Global Practice Leader, Commercial Banking at Genpact. Anu leads Genpact's commercial and small business lending and leasing businesses globally. Starting her career with GE Capital, she brings depth of experience across sales, operations management, and Lean Six Sigma transformations. A Six Sigma black belt holder with a strong customer focus, Anu advises commercial and small business lenders, investors, and servicers on digital transformation initiatives to drive business outcomes, such as time to close, cost to acquire, cost to serve, and contract adherence through various levers such as target operating model design, technology simplification, digital, and analytics. Prior to joining Genpact, Anu was at GE Capital for 14 years. In her role at GE Capital, she led risk and operations in commercial finance in India and the United States. And we are very pleased to have Anu with us here today. And joining her is Michelle Palomera. Michelle is VP Partner Customer and Digital Experience at Genpact. She is a leader in Genpact's Customer and Digital Experience practice for banking and capital markets. She has over 20 years of experience in technology and consulting in the financial services industry with a focus on customer and digital experience. Michelle has worked with numerous global firms on strategic efforts over the years across all major segments of financial services. Michelle started her career in technology and business re-engineering and has focused on digital and customer experience for the past 15 years. Previously, Michelle held leadership positions at Tandem7, which was acquired by Genpact in 2017, Nideo Partners, Zephyr Corporation, and CSC Consulting. Michelle holds a Bachelor of Science degree in finance from Boston College, and we're also really pleased to have Michelle with us today. And just want to reiterate one thing that Greg mentioned at the top, and that is that we do have time at the end for Q&A. We'll probably have about 10 or 15 minutes, and you don't have to wait until the end to put your question into the queue. Definitely get that question in the queue sort of as it occurs to you throughout the hour, and we'll make every effort to get to everyone's questions in the time we've got today. If for some reason we don't get to your question, which can happen if we've got just lots of great content like we have today and we run out of time, or sometimes it's just a question that's better answered one-on-one, whatever the reason, if we don't get to your question in the time we have today, we'll definitely follow up. So please ask away. We very much want to hear from you. And I think with that kind of brings me to the end of my little opening spiel here. I would like to now officially turn things over to Anu. And please, Anu, tell us a little bit about the topic at hand today.
Thank you, Mike, and thank you for the introductions, and a very warm welcome to all our attendees. Really, one of the biggest shifts that we have seen in commercial banking space is a shift of pendulum from, what we saw over the last several years around compliance, regulatory, to now with what is most prevalent in every conversation, and that is customer experience. If all of us probably in this field, we remember the great financial crisis, the IT budgets of the banks were so crowded out by regulatory projects. But if you see now, and at least in our experience in conversations with our customers, we see banks are giving increasing importance and a very sizable budgets which are going towards really enhancing the end customer experience for sure. I'll just share a very trivial anecdote, just to illustrate this point. Genpact's Customer Experience Group, Michelle is here with me, and you'll hear from her shortly. They were doing some research for a global transaction bank, and the whole theme was how to improve the digital experience for its users. And believe it or not, one of the questions, we were answering was, what kind of transaction could the supervisor in a corporate treasurer organization approve on a wearable device like Apple Watch? Where it's a very small in size, versus compared to a mobile or a desktop interface. Now, by the way, this is not the kind of discussion that was common in commercial banking even, 12 to 18 months back. So that's the kind of shift in thinking. That's the kind of shift in how the banks are so sharply focused on enhancing the whole customer experience part. And the increasing importance of customer experience is being driven by imminent threat, as we can all see, of unbundling of the banking sector. And I think I have kind of, reflected that on this page as well, which if you see, it really started off on the retail side of the businesses, but it's clearly creeping into the commercial banking areas as well. This has been pretty true, fairly true on the small business lending side for a while. For example, in North America, lending by private equity to middle market companies has grown almost 1.5 times in the last 5 years, while fintech lending to small business has become, highly significant. But interestingly, it's also happening in transaction banking, where historically customers have been more sticky, than in the overall lending space. In Europe and UK, fintechs, which, we all call as challengers banks sometimes, have really emerged in the last 3 to 4 years, and they have proven that they can do something in the consumer space. For example, the fintech TransferWise began offering FX conversions for individuals who are traveling to a foreign country. Now, such fintechs are really going out to corporates and saying, look, I have proven that I have robust technology infrastructure, so why don't you try me out for services like foreign exchange conversions in the corporate space? So that's the kind of shift which we are seeing. And clearly, commercial banks are now worried that these nimble newcomers will chip away at individual lines of businesses on the strength of their technology platforms, ease of doing business, and most importantly, the seamless customer experience which they can deliver. It's, I think it's not something which we haven't seen. If I were to give you an example of the unbundling which happened, whole cable industry, the whole cable channel industry, how we see that in the cable channel bundled by Netflix, where the pricing on the individual components, clearly is being questioned. And what we are seeing there is, cable channels are left to be just being the plumbing, whereas Netflix kind of, companies are really using their pipes and making money. That's really the data if I were to draw an equivalent here. So in short, the response to this, what we are seeing is an immense amount of consumerization of enterprise experience. And I think that's really how we are defining or how we are seeing the change of landscape for commercial banks. So if I go to the next slide here, what are these? So the need for enhancing customer experience clearly is there. But the question is how? How do you do it? And in our experience, these are the 4 levers we think, these broad levers which we think, will be important and crucial. And I'm going to walk you through a few of them, and my colleague Michelle, she's actually going to talk about a few, and we'll give you some practical examples of how we are seeing the whole combination of art and science working here. If you move to the first one, which is, the whole thing about optimizing the relationship manager versus the digital mix, a question that often comes up is whether we should have a digital-led or a relationship manager-led strategy. That we actually are faced by several of our customers, when we are, in our engagements with them, that what's the right strategy to lead. And clearly, in our experience, the answer is not an either or an or, but it's always what's the optimal mix, between an RM-led versus a digital-led strategy here. And before you decide what the RM digital mix should be, excuse me, it's important really to map out your customers on the three axes. And if you see here in this small red buttons, axis 1, 2, and 3, axis 1 is really, if you see, as the size of the corporate increases, their needs become more complex and cross-sell opportunities grow. As a result, commercial banks must invest more of their time in engaging in deeper solutioning conversation with their clients. In axis 2, on the transaction banking side, corporate customers increasingly demand the kind of self-serve, seamless experience that we are used to on the consumer side. So for transactional needs like cash transfer between accounts or payments or payroll processing, customers really expect digital touchless transactions with a very high degree of security against frauds. And axis 3 is probably the more difficult one and requires a deeper understanding of what we call as the customer persona. And we'll talk a little bit more about the personas later today in the webinar. There is an element here which is really both art and science as you build these personas. And if you think about it, on the science, quote unquote, the science side, as an example, the needs of a corporate treasurer persona is different from, say, a need of a payroll administrator's persona. The corporate treasurer would probably like to view their cash balances and perform the what-if scenario analysis really on a fly. But now think from a perspective of a payroll administrator, who, by the way, is also the user of services of the bank, transaction bank. They would like to be able to approve the payroll file on mobile interfaces as it gets uploaded. So I think that's really where the difference in what the customer needs would be based on persona becomes pretty evident. Now let's flip it and see the art of it. On the art side, the personas may have emotional needs, so these customers have emotional needs, which really goes beyond being able to just transact on a digital portal. And I'll illustrate that through another example. Think of a small business owner who has never taken a loan before. And if you see, and when we talk to our clients who are in the business banking or in the small business lending space, clearly those kind of customers, they really need that emotional reassurance of talking to a banker, being with them, talking to the relationship manager, before signing up for the commercial loan. So they may not be the right ones who would ever be very comfortable going with the digital seamless part of that experience. Or another example could be, an entrepreneur who has never taken ever a loan. They may have a cultural resistance to even taking any debt. So I think those are the kind of customers we have as a bank to be very, very clear understanding of as to what their needs are. And in our experience, at least from having worked with the banks on the commercial side, most of the time, the whole attrition of the customer happens when the transition happens. And an example here is many banks have found that at the time of succession, when the business passes on from an older generation to a newer generation in a small business lending world, often the attrition happens because the new owner or the new business owner may have a very different digital expectations from the bank. So bank cannot make an assumption about their customers, hence, but they have to really invest in understanding both the transactional and the emotional needs of that customer. So here, clearly, I think defining through the moment of truth, and developing that strategy is really where we see, the banks to focus on. I don't know, Michelle, if you want to comment on this or if you had any thoughts around this, great to hear from you as well.
Sure. Yeah, I think from my point of view, there's definitely a bit of art and science to determine, what is the formula regarding that right mix of people-based versus digital relationship management in the model. We're seeing almost every commercial bank look at not only what digital tools can better support the relationship managers, but they're also evaluating their relationship management and sales models overall. One key to this is to have a customer experience framework that's really digitally supported to be able to adjust and handle needs as they shift. What does that mean, and what does it look like? It means having things like a research-based as well as data-driven insight program to uncover those customer needs, having tools and methods to understand, analyze, and measure and monitor that experience. And we'll get more into that throughout this discussion.
Great. Now, what are these discovery tools for understanding the customer experience? I think you spoke about, look, the banks have to understand it, they have to understand the emotional needs, they have to understand the transactional needs, but I think the important question is, what are these discovery tools? So regardless of whether the outreach is through a digital channel or a banker-led, a bank must know what is the customer looking for, what do they want. And this really brings us to our next topic on how do you know what your customer wants? Historically, the answer to this question is, hey, it's in the head of my relationship managers, so they know what the customer wants. Well, the RM will continue to remain an important element in the whole quote-unquote art of understanding the customer's motivations. However, this can be complemented, we think, with the science of discovery tools. And some of these tools that are mentioned here, journey mapping, digital process mining, AI-enabled customer sentiment analysis. These are some of the examples of discovery tools, and we will talk a little bit more about that. That can really identify the stated and the unstated customer needs in a fairly scalable way. And to some extent, the transition towards, quote-unquote, the science side of the spectrum has been ongoing, as in the past few years. There has been increasing emphasis by the commercial banks in maintaining their CRM systems. I'm sure, a lot of you who are attendees today of the webinar, who are in the front end of the house, who are relationship manager or bankers, probably would if this would resonate with them. A lot of banks are maintaining their CRM systems with more rigor. And at many banks, clearly what we are seeing is relationship managers are recording far many more call notes, than earlier. So clearly, if Salesforce, if it's not on Salesforce, it didn't happen. We hear a lot about that as well. So it's interesting now that a lot of the science behind it is coming into play. However, today there are more tools available which we will share, and these tools, do not necessarily substitute the need of having a clean CRM data, but clearly they can augment it. And I just shared with you some examples, but we would love to hear from Michelle more about journey mapping and how this is such a critical discovery tool for customer experience. Michelle?
Sure, and some of these tools definitely require more art than science or vice versa, and have sort of a varying degree of emphasis in those buckets, if you will. This first tool, which is really a technique, journey mapping, requires both. Lots of banks are doing various forms of this, and journeys can be defined at varying levels of scope and depth. We see this term being used very broadly, as well as in a very granular sense, almost at a use case level in some cases. Onboarding journey, monthly hedging trade journey, collateral release journey. Regardless of the fidelity of how your organization defines these, it's really important to identify and align on what those key journeys are across your organization. Using a visual depiction of the customer experience really helps organizations get that common view of the customer and all the touch points, and having it in a form that you can easily transition to execution. That's really critical. The art and science around this is also about the qualitative and the quantitative inputs that are required to inform it. It's a best practice to conduct contextual research with your customers and internal users to understand their workflow, their needs, and the relevant ecosystems that may exist around their process. That's the qual side of the equation. Gathering things like quantitative data, such as baseline metrics for certain steps on the journey, NPS, or even time on task for supporting operational functions throughout the journey is critical to understanding the pain points and also to define the targets for improvement. And that's the science side. Setting standards on how to create these will bring both velocity to your programs and will also allow subject matter experts to focus on coming up with solutions versus churn in formats and just designing the journey visualizations themselves. And that's a common problem we see across banks today. Creating a governance model around how to create journeys and execute on those and defining a consistent way to kick off the efforts, engage your business partners, and create these assets will definitely ensure you get the most value out of the exercise and actually be able to deliver on your future state. And that execution side continues to be a challenge that we see in the market. And not just using the technique of mapping the journey, but also using tools throughout customer experience as a practice in general is a best practice. Being able to store the journey assets as actual data elements with metadata allows you to set up a framework for reuse and consistency, as well as to be able to easily share and measure that journey. Here's an example of an onboarding journey in a trade finance context. In this example, it starts with initiation of the onboarding process and carries through data collection and enrichment, the credit risk, KYC or AML processes through negotiation and product and account setup, kind of the typical steps. We look at both, not only what's happening on the customer side, but also what's happening behind the scenes. We also capture all the supporting systems and process metrics associated with that. This is also showing opportunities for digital interventions, and we identify those and depict that on the maps. In some cases, these also become almost ecosystem maps or value chain depictions and incorporate that and really show how other partners can intersect with the experience, such as consortia, third parties, et cetera, either in the current state or as a future opportunity. Now, we've brought some science to this, and we've actually created a tool that allows you to create and store the journeys. This is, emerged as a best practice as banks are finding it increasingly difficult to execute with velocity and consistency with their journey efforts. Back to you, Anu.
Thank you. And I think this is another one, what we call as, digital process mining. A common problem commercial banks really are facing today is that, if you look at it, their customer journey is very fragmented across multiple systems. For example, I'm sure most of us who have been in a commercial bank or have seen some of the lending processes, the customer journey may actually begin with an entry by the banker or relationship manager in the CRM system, then followed by a digital loan application or a loan application in a customer portal, which will be underwritten in a credit underwriting system, funded on a loan servicing system. Now you think of it, the above results in a very, very fragmented and even misleading view of that customer's journey. The lender may say that it takes 10 days for me to decision a loan, but if you think from a customer standpoint, the end customer standpoint, their clock starts ticking from the point that the loan application was submitted. And actually, even before that, for that matter, because the loan application may have been so onerous and so long and so confusing that it may have taken another 10 to 15 days for the customers to even complete it. So think from that customer's perspective, from that customer's standpoint. In their head, that journey or that process started at the time of the need of that loan, and then from the time that the application, process started off. What we are seeing today is that there are several process mining, process discovery tools, and some of the examples that we have shared here, which can extract data from different systems that I shared above earlier, and automate the process discovery and create a digital replica of that customer's journey, and presents the bank with a view of really what's actually happening versus what they think is happening. Such a digital twin of the actual process can then be used to turbocharge journey maps with data on the customer experience side. Michelle, any thoughts?
Yeah, I would add that, some of these tools include things like Stereologic, Celonis, Signavio, and others. Gartner published a market guide on this topic last year, and I would bet that they come out with a magic quadrant at some point soon on these tools. There's quite an array of process mapping, modeling, and mining tools out there. And within these mining tools that you mentioned, there's another use case we see as pretty prevalent where they're using them to model the hypothetical future state process or journey, especially if the data is disjointed. And in this case, the future state KPIs can be set in. They create software design patterns that represent how a process will behave in that sort of future state. Using digital twin, we can provide this ongoing measurement of how the change and the transformation of the process and what that impact is. So this is definitely part of the science of the equation there.
Now, digital process mining also enables us to mine process data to gain insights on the customer journey, but commercial banks must go through the next step and gain insights from the content of what the customers are saying. For example, a customer who's seeking a payoff quotation through the customer portal may be at a higher risk of attrition. Historically, commercial banks have relied on traditional sources of data, like bureau scores and financial statements, and that too solely for underwriting new loans. There are two major changes in the commercial banks. One, there is a wider variety of sources of customer data that is potentially usable through the use of AI technology, and that's really where we think applying AI to understand the customers better would make a lot of sense. So what happens here is really, if you think of it, the customer data that is potentially usable through the use of AI technology, a lot of the data is sitting in unstructured sources like social media and news media. Such customer data may also be sitting in banks' own systems, like customer service transcripts or RM relationship managers' call notes in the CRM system, or the commercial real estate appraisal reports. So clearly, I think that's a very, very sizable amount of data or information which can be leveraged, and artificial intelligence technologies has been proven to be really, really good in getting us there. Secondly, the historical data was purely seen as supporting the loan underwriting process. But if you think of it now, the data is now being mined for cross-sell and customer retention purposes too. So the three tools that we discussed, journey mapping, digital process mining, and artificial intelligence, they all help us discover what the customer wants and what their journey should look like. Often the data points derived from these sources must be interpreted by an experienced banker who may be the best judge of the next best action. Hence, the banker's so-called art is enhanced with quote-unquote the science of these discovery tools. So that's where we see the magic of art and science coming together. However, to translate the ideal customer journey to reality, a commercial bank must bring together process, people, and technology to be able to deliver that seamless experience. And the customer journey is the demand side of the equation, but there is also what we think the supply side of the equation, which is what delivery capabilities must this commercial bank bring to satisfy what the customer's wants are. Otherwise, you know, as bank, we may have created a really awesome experience, but the minute it comes and hits into the back office delivery shops, the entire experience dissipates. So this is really where we think, a concept of service design comes in, and I would probably, ask my colleague Michelle to talk more about it. It's a fascinating concept. Michelle?
Sure. So the concept of service design really answers two questions. The first question, to Anu's earlier point, what are the people, process, and technology capabilities I need to bring to create that targeted customer outcome or outcomes? For example, if my customer wants to manage her cash on a real-time basis, do I have the technology capability to link my core systems to the digital channel with real-time data feeds? And secondly, do I need things like, do I need a 24-hour service support staff that's trained to answer the type of questions that my customer may have? The second question that service design answers is, what are the internal bank outcomes that need to be optimized? Example here is many new age lenders come up with alternative credit underwriting models that use alternative data to speed credit decisions. However, they also ended up with higher non-performing assets. So how do we design with these outcomes in mind? There's definitely an art in this, however, it's enabled by science as well. First, it's important to make sure to define the problem. Service design works best when a clear outcome is defined and ideally quantified at one or more levels. Now, how do you drive to that outcome, and how do you do service design? This is, generally speaking, a 6-step process that we take. It's holistic. It requires you to bring together multidisciplinary teams and senior leaders representing front, middle, and back office, such as product and line of business leaders, operations, and technology. First, we start by assessing the current state. We also gather insights from some of the tools and techniques described earlier, like research, where we're observing clients and internal operations colleagues. We gather data inputs derived from process or data mining tools or activities, as well as the journey mapping activity. This provides the framework for connecting pain points to the underlying processes and systems. And we look at performance across specific processes in that value chain. We then facilitate a series of workshops to align on the current state performance and experience and to prioritize aspects of the problem statement. Using design thinking techniques, we then reimagine the future state by ideating around those outcomes. This drives towards the end state vision for customers and colleagues, where we identify potential solutions that span digital, people, and process changes. We then take a select few of the identified solutions into a concept phase. This might be some platform or user experience changes to your product. It might be a new organizational design to better load balance operations support, or oftentimes the solution might include a new set of KPIs and a measurement framework around it. Then we create the final, what we call a service design blueprint, which is really beyond just a journey map. It is also a roadmap together with the journey map and the model for ongoing evaluation, measurement, and innovation. So here we apply a service design technique to a client onboarding example on this slide. The problem statement is a high cycle time of client onboarding from initiation through account setup. We identify and quantify pain points around manual paper-based processes and workflows, complex hierarchy of approvals, unclear communications to clients, things like that, set of common false positives. We then model and design the future state process and experience to cutting the onboarding cycle time by 80%. And some of the solutions we identify to support hitting that metric may include things like a new digital KYC portal, e-signature capability, OCR, and maybe AI for sanction screening, for instance. But this isn't easy getting to this holistic view. It does require alignment at the top, new ways of working. It does pave the way for that change, however, and these are change programs. By putting the cross-functional teams together and giving them context, they'll start looking at these measurements in a new and transformative way. This will help them better frame the problems from a solution point of view, which is often a problem. Sometimes the problems and the goals just aren't defined well enough. And more importantly, it also helps operationalize the new KPIs. And it's also really important to think through incentives when taking this type of program on, making sure there's alignment with everybody involved. This approach is somewhat more mature in markets. I noticed we have a global, we actually have a global audience on this call, which was, I think, even more than we expected. So just to comment on sort of the differentials in the regions, I'd say this approach is more mature in markets like Australia and New Zealand, in Asia Pac, and even in Europe than it is here in the States. And each region, kind of has a different set of macro pressures going on that's kind of driving the adoption of this type of service design technique. For instance, we're seeing, the Royal Commission in Australia be a big driver of this type of work, as well as issues like Brexit in Europe. I'd say the majority of situations where we see this technique being adopted is in cases where banks are really trying to model around cost reduction combined with a goal of improvement of customer experience. And we're seeing this being taken on in big ways. For example, just to show an example of where, this holistic approach isn't taken, if we take the customer onboarding scenario again, we really do need to measure more than just throughput and cycle time. If we're looking mechanically at throughput and there's bad quality of data in the profile setting, then things might be going through faster, but they're not having the intended outcomes. And in one case, a commercial bank was able to reduce onboarding time from, I think it was 35 days to 4. However, they experienced a big spike in fraud because they didn't look holistically from a multidisciplined standpoint, and they did not take that front-to-back view.
So just for a recap, what we spoke about so far, we spoke about 3 levers of driving customer experience, which is getting the optimal digital RM mix aligned with the customer personas, 2, discovering customer needs through an array of tools, which we shared with you all, journey mapping, digital process mining, and artificial intelligence, and the whole art and science behind that. And Michelle just spoke about how we design for outcomes through a service design framework. But lastly, and not the least, is, of course, the whole portion about the user experience and how that must be delivered seamlessly. One critical lever, what we have always seen, is how do you design that, how do you implement it, and I think really the most common refrain we hear from our commercial banking customer is that they aspire to move from a product-based approach to a solution-based approach. For example, instead of being perceived as selling cross-border payments or foreign exchange or LCs, they would like to be viewed by their clients as a partner who can help them manage their global growth. So the whole fragmentation, what are those fragmentation, what are those 4 fragmentation of product, persona, channel, or product providers, what are driving customer or user experience. And in our view, fragmentation of products, for example, is the middle market company going in larger may start using cross-border payments for foreign payments, wires for big purchases, and ACH for regular payments. Often bank digital channels have completely different user experience across those product suites. or a fragmentation by personas. We have already discussed the importance of understanding the personas. Often as your corporate customers get bigger, there is an increasing fragmentation of personas as roles become more specialized and their use of digital channel varies across type of roles. Hence, rigorous user research is necessary. An example of fragmentation of channels, there is an increasing expectation of consumer banking-like omni-channel experiences from customers. The same customer may want to interact with bank across channels like branch, desktop, mobile, and now post-mobile devices like wearables or voice assistants. So that's really the whole user experience driven by fragmentation of channels. And what are those fragmentation points of product providers? As our commercial banking clients emerge as platforms for other fintech product providers, there is a need to seamlessly integrate the ecosystem. In North America, we are increasingly seeing models where a borrower applies for credit on the digital channel of commercial bank, and if the borrower is outside the credit box of the bank refers this customer to a fintech provider, for example. However, in such a case, the bank cannot ignore the customer experience that this customer will go through with the third-party provider, not least because the loan applicant may very well be an existing customer of the bank, maybe on the deposit side. So it's very, very critical for that experience to continue to be as if it was provided by the bank. And I think that's really where we think that achieving some best-in-class user experience will be critical, and I would probably now transition it back to my colleague Michelle to share some more insights there.
So how do we achieve that best-in-class user experience, and how do we execute on that vision? Here are some of what we've found to be critical to getting to that optimal user experience. And I'll put these in context of commercial banking. Many of you are doing some of these things in context of a large project. However, we see very few banks actually institutionalizing all of these things to incorporate an ongoing process for innovation in user experience. Just to pick a few examples here on knowing your customer, understanding your customer and your user. For instance, here, looking at techniques such as user research, we find that many of the larger firms will already have established UX teams. And even within that, they may have user research teams. However, most often those teams are only engaged on a project basis, and no ongoing cadence of research is really set up to maintain having that pulse on the customer's needs. This often ties back to the chargeback arrangement within the enterprise and CapEx project funding and how that's allocated. The industry is changing so rapidly, as Anu outlined, so doing this on an ongoing basis is really crucial to stay ahead and to be able to incorporate change and innovation on a continued basis. In one example where we were doing research for a bank with their cash management customers across segments, we found that the usage and behavioral patterns were really not based on the size of that client or the segment they were in, but it was actually based on the nature of the transactions that they had to process. So whether you have smaller volumes of large dollar transactions or large volumes of smaller transactions, this has an obvious impact on the interaction model that you design for. Designing for simplicity, another example here, that's critical. And in commercial banking, where we're dealing with a lot of information and complexity, often simplifying is the single best way to improve customer experience, digital and non. Synchronizing your channels and clarifying communications and taxonomy, figuring out how to create a single workflow really creates an easier, more predictable and efficient way for your customers to interact with your bank. In onboarding, designing a scalable workflow is a common challenge here. How can you create a workflow that scales but that still provides clear next steps for task resolution? You also want to design a flexible framework that can respond to changes in policy and regulatory requirements at the same time. The final point I want to make here on this slide is on measurement. I'll call that one out. UX and CX teams now need to show and prove the value of the investment in user experience. This means we need to define a way to measure. And this can be tricky depending on how your teams are set up and the quality of the baseline metrics. Again, this may be done in context of a newer, bigger initiative, but the industry needs to get more religion around measurement in general within the scope of user experience. If you partner closely with your business and product teams, it's much easier to measure things like market share increase, conversions, productivity improvements, cross-sell revenue increases, in addition to what historically the UX team may have measured, such as things like adoption or usability metrics, usage metrics, etc. So how do these approaches come together to yield a frictionless user experience? So thinking about how these best practices really come together. Here's a persona of Jay. Before we get into Jay, just a quick word on personas, and I know we mentioned them earlier. Persona has long been a tool used in user experience design. These are really meant to be rich representations of users and go much farther than just demographic or customer segment details. And most well-crafted personas include a multitude of information, including attitudinal or cognitive information. This points to things like whether this customer archetype might better respond to a digital channel, or they may prefer consuming data in a grid layout versus a wizard-like interface. We also capture things like aspirations and motivations, as well as behavioral details. And these are all really critical elements in designing a best-in-class user experience and knowing who you're designing for. So back to Jay. Jay's a 34-year-old cash manager who works at a mid-market software company. His day-to-day tasks are things like managing cash, initiating certain types of payments, and managing money between accounts. He's quite tech-savvy, and he's quite ambitious and motivated to show value and advance his career. His challenges include the fact that he needs to use a variety of disjointed systems, tools, and he needs to keep up with regulations and also the impact of some new international expansion. So let's imagine a future state where Jay could see, and this is a future state of his user experience as a customer of a bank. So let's imagine a future state where Jay could see that once a balance he was responsible for reaches a certain threshold, his treasury management platform would not only alert that the balance was high, but it also could find accounts to move the funds into that have optimal rates and or suggest advantageous payment transactions. What if the CIO missed this? The CIO might have an initiative underway to replace legacy technology in the platform Jay uses. It's critical to also address the user experience as part of that. And we're definitely seeing a spike in investment in platform modernization this year in commercial banking, and in particular in the transaction banking space. The winners will be those who carefully think through the opportunity to improve the user experience and not just treat those as tactical exercises. So there's an art to balancing how much to take on and try to scope as part of an MVP on these programs and ensure enough customer and business value is delivered in an agile model. Structuring these types of initiatives to set a foundation, including things like design systems, will help bring velocity of future product development, as well as ensure that consistency of the new customer and user experience. So it will help to scale that balance of the art and science around customer experience.
Hi, Michelle. It's Mike. I just want to let you know we're about 7 minutes from the top of the hour if we want to take some questions.
So I think we'll just wrap it up, and I think in the wrap, probably what I would say is we'll conclude with the same theme that we explored in service design. Having a great user experience is not sufficient. I think user experience is the touch point from which a service is delivered, but behind that touch point is often really an antiquated, operations organization. And clearly that's really what has to change, what has to become smarter. and what we think that's really an application of artificial intelligence or robotic process automation can be done, and applying that RPA and layer of AI gives an agile alternative to creating a frictionless operating environment without the need of a large-scale retooling of major legacy systems. So I think that's really where we think, in combination of our customer and user experience, having a very seamless experience through the operations organization will be critical too. So just to wrap and summarize, and we will go back to our four-pronged approach that we shared in driving the CX or customer experience. In summary, we think the number one, biggest one, optimize your RM to digital mix. Number two is know what your customers want through journey mapping, digital process mining, and AI tools. Three, design for outcome, and leveraging the service design framework is a great way to doing that. And four, deliver that best-in-class customer experience through a well-designed user experience, digitizing the middle and back office and changing the way of workings of your organization. So that's what we have on art and science in driving customer experience in commercial banking. Over to you, Mike.
Excellent. Thank you, Anu, and thank you, Michelle. Also, as I thought we might, we have so much great material here. We've run out of our Q&A time, or not? We haven't run out, but we've got a shorter Q&A time than we originally planned, but lots of great content leading up to it. So let me jump into and get a couple questions in here. All right, the first question I would like to ask is to Anu. In large banks like ours, change efforts often get stuck in business silos. How can we successfully scale our customer experience transformation efforts?
Sure, thank you. I think our experience very clearly is that it has to be driven, it has to be a tops-down and a bottoms-up approach. And I think it's very critical from a tops-down perspective. There has to be a sponsor. There has to be an owner who's driving it. And it's absolutely right, from the question you're asking. There are several functional silos, but they all have to collaborate and come together. And I think that's really where the beauty of service design is, what Michelle just spoke about, that whole process around creating a team, a cross-functional team, and having a very clear vision or an outcome is almost necessary to be able to drive what the bank or the financial institution has charted out for what kind of experience they want to drive in the bank. So that's our view, that it has to be both driven from the top and also bottoms up through a service design kind of an approach.
Excellent. Thank you, Anu. All right, and let me ask Michelle the next question. So Michelle, on the topic of platform modernization, where are you seeing investment in platforms, and can you give some examples of that and how companies are approaching this?
Sure. I was saying earlier that, we definitely see a spike over the last 12 months across the Tier 1 banks investing in their treasury solutions in general. So that kind of spans the gamut, the full portfolio there. I think about 4 or 5 years ago, we saw a lot of investment on the lending side, and to a degree, some of the technology there has been commoditized. There's been a lot of fintech, emerging there in the lending space, in the commercial lending space, and now I think we're seeing more of an influx of investment in transaction banking in general. And I'd say, really looking more broadly at the customer view and not just a product view. So we're seeing these platforms expand from a functionality standpoint to really incorporate their various customers, even if they have different roles within a client that might utilize their portfolio of products. So that's been a shift as well.
Excellent. Thank you, Michelle. All right, we're just about the top, but I'd like to just squeeze in one more question here. This is a big question, but I'm going to let Anu give it a shot here in the time we've got left, and we can maybe go over a minute or two, so no worries there. Can customer experience be a brand differentiator in a strictly B2B market, such as commercial banking? If yes, how can we differentiate our CX from born digital competitors like Amazon, who have data, technology, and better outreach?
Absolutely, yes. We strongly believe that customer experience is absolutely a differentiator. And I think, I still think that for commercial banks, there's a huge, piece around what we spoke about earlier as well. If you think of those three axes that we spoke about, there is still a need, the emotional need that the customer has to be able to transact with the bank, but very clearly developing that connect. So I think the banks still have that opportunity to connect emotionally with the customer at the same time, understand really what they need, and tweaking their strategy to enable what the right digital mix could look like. And I think that could be a great answer versus the tech giants. While the digital experiences will be miraculous in terms of touchless or very, very speedy experience, but that connect with that customer, that emotional connect with the customer may not necessarily happen. So I think that there's a great opportunity for banks to be able to optimize both emotional need as well as how they can enable that digitally.
Thank you, Anu. And I said I was going to take just one more. I said that was going to be the last question, but actually there's another great question I really would like to ask. So let me just toss it out to both of you. How do you apply AI to understand the customer better?
I can take a shot at that, and maybe Michelle, you can chime in. I think one of the areas that we just spoke about was, all about what are the different tools that we can actually leverage, and I think AI is clearly one of those. And typically in the journey of the customer, we can leverage AI, do several amount of sentiment analysis just to understand. And I think I was pointing again towards whole emotional need, but I think there's so much of data which is sitting in with the banks today, and clearly applying AI can help understand, what that customer expectation is. And we see very good examples, good use cases, where it can be leveraged to drive seamless experience.
Yeah, and I'd add to that, sort of both. It can be applied in almost a self-serve type of way, but also on the servicing side. So, imagine if you could predict what your customer was calling in about, when the phone rang. And, even one step further, being able to risk mitigate better by using, predictive analytics and AI applied to client portfolios. So, understanding impacts of potential future events, macro, sort of types of issues, and being able to, use that freed up time to really advise your clients. And those are, some of the problems we're already seeing clients work on today.
Well, wonderful. Thank you both, and I think that's a good note to end on. Let me, first of all, thank Anu and Michelle both. It's been really great content. I knew we had a lot to get through here. I want to thank everyone in the audience for being here, for hanging on with us a little bit past the top of the hour. I know so many people have got something to rush off to, so I really appreciate you guys hanging around. And I think I would also like to just remind everyone that we're having a follow-up email that will be coming your way. It'll have a link to the recording of this event. And please, give a listen to that and review some of this content. Really good stuff here. And with that, I will wrap it up. Wish everyone a wonderful rest of the day, and I hope you'll join us again here very soon. Thanks so much.
Thank you.
Thank you.